Steve, I'll start with you. Steve Leisman mentioned the resilience of the U.S. economy. Sort of how do you see that balance there in terms of what the Fed's trying to accomplish, that resilience that we're seeing, and what that may mean for people who want to invest in the equity markets?
Good morning, David. This makes it a very tricky question because at some level, we're sort of hoping for a recession by looking for the change in interest rates that are predicted by Fed funds rate in the second half of the year. That's what Bullard and Williams are trying to stamp out, and I expect we'll see Powell try to stamp that out today. And so the problem is, are we rooting for a recession so we can get lower rates, or do we want a good economy? And right now, there's a big divergence. The Atlanta Fed GDP now, which is usually a pretty good indicator, is showing 4.3% for fourth quarter GDP. That's well above economists' estimates. So really, nobody's really clear about what's going on. I don't think the Fed wants a recession, and market's got to be clear about what it wants. And, do we want stuff that's so bad that the Fed cuts rates? That's a tricky thing to wish for.
Yeah, it is. At the same time, stocks do seem to be, or at least there are many who seem to be banking on the idea of a soft landing, despite, of course, what are those huge inversions, 2s, 10s, for example. What is your take? Is what many investors are hoping for here in terms of a soft landing, perhaps a very mild recession, if one at all, going to be realized?
The bond market's saying it's not, and when the stock market and the bond market diverge about the economy, I tend to lean into what the bond market's saying. The one thing about an inversion, though, is it can take a while before that takes place. So you've had recessions after big inversions, but sometimes it's taken a year or more. So again, we're looking right now. I think the Fed is trying to manage expectations about what it's going to do. They've been treating the markets sort of like kids in the back seat, asking, "Are we there yet?" And they keep saying, "No, we're not there yet. We'll tell you when we're there. Stop asking." And I think that will be sort of the tone of Powell's speech. Not as harsh as Jackson Hole, but I think sort of this reminder that things have still got to resolve themselves. We're not afraid of a recession, but we're not looking for one. You shouldn't be either.
I like that analogy, Meghan, kids in the back seat. I want to get your thoughts on this topic and why investors do seem to be kids in the back seat right now.
Yeah, I do have 2 young kids, so I know that very well. And I agree with the analogy. And I think a big reason why the Fed's not able to give much more than no, we're not there yet, is because the forward guidance that investors became so addicted to has to be removed from the equation. That was a tool that the Fed was using when interest rates were at 0, and it was trying to guide policy even easier than that. And now we have a great deal of inflationary uncertainty and a Fed that is far from 0 in terms of their interest rates. So I don't think we're going to get a lot more information from the Fed. And we really shouldn't be getting a whole lot more information until we see the data come through. And I think that as we look into the next year, I don't think it's likely that you see the economy stay as resilient as it is while also having inflation come down as quickly as we need it to. One of those has to give. And I think that's where we get to our expectation for a mild recession next year.